Welcome everyone to Vested Interest. This is Shane back for a portfolio update, our weekly update. We do these every Sunday morning at 7:30 a.m. Before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel we focus on dividend growth investing. It's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the stocks. I recommend you do the same, whatever that is, weekly, twice a week, monthly, quarterly, once a year, whenever you get your taxes, just so long as you have a schedule that you can consistently put money into your portfolio. I cover all my investments into the portfolio on this channel. I do not have a paid Patreon account. I don't intend to have one. We all have enough to pay for, so it's free to see what I'm doing. But if you would like to help out the channel, hit that thumbs up down below. Let me know, drop a comment. Let me know if you are a dividend growth investor. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hit that notification bell so you're notified whenever we put out any new content. And like I said, drop a comment down below. How is your portfolio doing? Mine is a little bit of a mixed bag. Some things are still, showing a lot of red, and some things are starting to rebound. So a bit of a mixed bag overall. Let me know how yours is doing, and then really appreciate everyone who's taking the time to subscribe and do all those. It does help out with the YouTube algorithm, and a special thank you to those out there who have hit the subscribe button. Really do appreciate it. The channel continues to grow because of people like you. Well, let's get back into the video and see what we got going on with the portfolio this week. And we will start out on April 22nd, Monday. We had some options that we got into, and I'll be honest, this is a little lower than I typically go on options, and I don't think I would go this low again with some of these plays, but we did receive $25.90 total in options premium. We did two contracts, one on Johnson & Johnson, one on BABA. Both of them are covered calls. Opened on Monday, 4/22. This one is for one contract, J&J, and remember, one contract is 100 shares. Again, covered call with an expiration date April 26th, which was Friday, $152.50 strike price, and we only received 15 cents per share. So again, probably wouldn't go this low again. There's the fees we had to pay, so we received $14.45 total for that Johnson & Johnson covered call. And then we did one covered call, also one contract covered call on BABA, ticker BABA. Same expiration date, April 26, $74 strike price. We received $12 for that one, so $11.45 after the fees, total of $25.90. And the results of those, the Johnson & Johnson covered call expired worthless, so we keep that premium. We keep the BABA premium as well, but those shares were assigned. So the 100 shares was called away, and I get closed out at $75 and some change. So we got the $74 per share. Yeah, baby. Want to come watch a movie? Yeah, I'll come watch a movie. Can I finish this up? Yep. All right. Sorry, that's my daughter. So that was called away. So we received the $74 per share. So that's $7,400 back into the portfolio. So we may either just buy the shares back on Monday or run the wheel on this one and do a cash secured put for next Friday, but we'll see. So $25.90 in options premium, again, a little lower than I typically go. Probably won't go that low. Again, I think I forced these ones a little bit, thinking that these would stay down. Johnson & Johnson obviously worked out. BABA one, don't really like that those were called away. But it is what it is. We made a little bit of profit when those were called away. Hopefully I can get them right around $74, $75 per share and buy them back on Monday. Or like I said, continue running the wheel and just do a cash secured put. Now, dividends started to roll in on April 24th. We received dividends from a couple different companies. Cisco Systems paid us, ticker CSCO. This is out of the information technology sector. They paid us $80.68, and we do have the drip set, so that means anytime a company pays out dividends, those funds go right back in. In this case, the $80.68 went right back in and bought more shares of Cisco, 1.67736 shares. And we also had On the same day, dividends come in from Comcast Corp, ticker CMCSA. This is out of the communications sector. Paid us $31, and that $31 went right back in and picked up 0.77537 more shares. And these new shares added an additional $3.64 in passive income. So that is that dividend snowball in effect, right? We already own shares of Cisco and Comcast. Those shares paid out dividends. Those dividends go back in and buy more shares. Those new shares add additional capital over the next calendar year, and that dividend snowball continues to grow. And we weren't quite done. We received more dividends on the 26th of April. Cisco Corp, ticker SYY, this is out of the consumer staple sector, paid us $50.33. And that $50.33 went right back in and bought more shares, 0.64963 more shares, and those shares added $1.29 in additional passive income. Now on to the first new capital added to the portfolio. We did add $1,711.71. That's a lot of ones and sevens there on April 22nd. And with those funds, we picked up 2 more shares of American Water Works, ticker AWK. This is out of the utility sector. Picked it up for $118.27 per share. 3 more shares of Nutrien, ticker NTR. This is out of the materials sector. It's also a Canadian company, so there are some implications, some tax implications around this. I pay the foreign taxes right up front whenever dividends are paid. You want to make sure to check if your brokerage account does that for you, or if you're going to have to do that whenever you file your taxes at the end of the year. So Nutrien, being a foreign company, has some different tax implications. Again, my brokerage just takes care of it. You just need to make sure if you have any foreign companies like that, you understand how you are handling it, whether you're going to pay for the taxes whenever you do your taxes at the end of the year, or whether your brokerage takes it out up front. So we picked up those shares at $52.34 per share. Added 10 more shares to our Starbucks position. This is our newest position. We're trying to build this one out. Ticker SBUX out of the consumer discretionary sector. Picked up those shares at $87.94. We'll probably run this up and buy up to $95. I think 98 and some change is where it sits at 15% of its 52-week low. I'm going to try to keep it under that. I'd really like to build this one out under $90 per share, and I'd love it if it dropped back to 85, 84 where I started buying shares, but we'll see. We added 2 more shares to our Alibaba Group position, ticker BABA. This is the one that we were running options on, so we definitely are going to add it back into the portfolio, even though they were called away. And it was very nice to get some more shares at $69.79 here. And then as you saw, they were called away at 74, so it's really bounced back up a little bit. CVS, 2 shares of CVS, ticker CVS. This is out of the healthcare sector. And if I didn't mention, BABA is out of the consumer discretionary sector, and we picked up those CVS shares at $69.24. This is one I'm probably gonna do a couple shares every other week while it's down under 70. And Comcast, we're gonna keep building this one out. We added 4 more shares to our Comcast Corp position, ticker CMCSA, at $40.17. This one is one I'm going to focus on for May as well, because it has pulled back into the $37, $36 range. So I want to bring this cost basis down, and I'd love to get this to 200 plus shares. All total, these new shares that we picked up, this $1,711.71, added an additional $47.22 in passive income over the next calendar year. And we weren't done. We went back into the portfolio on April 26th here. Messed up the date. Didn't update it from last week. But it was April 26th, so that was Friday. And we added an additional $452.49. And with those funds, we bought 3 shares of Sibanye-Stillwater, ticker SBSW. This is a mining company, African mining company here. Same type of deal. I think my brokerage takes the taxes out right away whenever they pay out dividends. But we picked up those 3 shares at $4.97. We picked up 2 more shares of Realty Income, ticker O. We picked up those shares. This is a REIT out of the real estate sector. We picked up those shares at $53.79. Another one I'm going to continue to add in the month of May to this position here. SCHD and VTI, I'm going to add 1 share every week regardless. We picked up those shares of SCHD. This is the Schwab Strategic Dividend ETF, right? Dividend growth ETF here. We picked up that 1 share at $77.65, and 1 more share of the Vanguard Total Stock Market, ticker VTI. That is just what it says. The total United States stock market. Picked up that 1 share at $252.37. Passive income added with the $452.49 and the shares that it purchased, $13.09. Total invested $2,164.20. Passive income added this week, $65.24 in total. Very nice to see that passive income continue to grow and continue to add to the portfolio every week while I add new capital. And then, as you saw, while several positions pay out dividends and they add new capital and new shares as well. Quick run through the sector weights here. Communications makes up 9.86% of the portfolio. Consumer discretionary at 5.22. Consumer staples sits at 10.82. Energy makes up 6.03. Financials at 6.36. Healthcare makes up 14.05. Industrials at 7.08. Technology makes up 6.84. I would like to, Cisco, HPQ, while those companies are down, I probably will take the opportunity to add to them. Materials sits at 10.74%. Utilities at 9.67%. REITs and real estate at 10.97%. And ETFs is still the smallest slice of the pie here at 2.36% of the portfolio. Now, what a lot of you like to see from week to week, and I'm going to show this whether I'm up, whether I'm down. Part of the whole reason I started this channel was I saw a lot of YouTubers who they talk about stocks and they talk about their portfolios, but they never show their portfolios. And if they do, you've got to go, some paid paywall or go to their personal website or buy this course or, all these other ways they have to kind of try to get your money. I don't need your money. I work a day job. I have my own money. Eventually, I hope to get this channel big enough where I can monetize the channel and make some money off of ads on YouTube. But I don't need your money. I want you to be putting your money into an investment account. And I know some of you out there just think that it's too hard. I'm just a regular person, or you don't want to do it, or you think you got to pay somebody to do it. You can do it even if it's just putting money into ETFs. There is no reason to pay someone to manage your money for you. You can manage your own money. So I wanted to show, like I said, that someone like me, I don't have a degree. I'm not from a wealthy family. I don't have a background in finances or stocks or work on Wall Street or anything like that. See a real portfolio built out over time by someone who goes to work just like you do. I have a couple kids. You heard my youngest there wants me to come in and watch a movie when I'm done. And see a real portfolio built out over time, so that hopefully it can give some of you who haven't started your own investing journey the confidence that you can do it too. And you're learning along with me, right? We're going to make mistakes. The best investors in the world make mistakes. I make mistakes. You can see my mistakes. Hopefully we can learn something and you don't make the same mistakes. You can see mine and learn from them, and I'll learn from them as I go as well. But anyways, here is the on the previous page, we saw all the portfolio different sectors. This is each individual position in this column. Total shares I own of each individual position. Current price as of the close of business on Friday. Market value here. Average share price here. That's what my cost per share. How much I have into it. Purchase price. Total return here. If it's in the red, that means I'm down. Percent return here, same thing. Green means I'm in the positive. Red means I'm in the negative. Those are red ones are the positions I'm down on. What sector they fall in, whether they're a quarterly, monthly, semi-annual payer here, and how much they pay. Current dividend yield as of the close of business on Friday. My yield on cost. The portfolio weighting. I do have a bit of a rule in my portfolio. I do not want any one position to be over 10% of the portfolio. I do not want any one sector to be over 20 to 25% of the portfolio, 25 being the absolute max. I might let it go up to 25 for a position that if it's really pulled back or something. Estimated annual income in this column. Payout months here. The dividend growth year over year here. This adjusts whenever they adjust their payouts. I adjust this column. Same thing with all the columns. As they adjust, I try to keep them updated. And where it sits at 15% of its 52-week low. I use this as a high point for what I want my cost basis to be, right? So I want my cost basis to be under where they, at any one time, to be under where they sit at 15% of its 52-week low. Total shares currently 6,259.718 shares. Market value of the portfolio, it's down a little bit, though it's up overall, but it's down from its all-time high, $240,915.75. I have $234,021.03 into the portfolio. These are actual funds out of my pocket that have gone into the portfolio. I am up $6,894.72. I do not focus on this. Up 2.95%. I do not focus on this. Current dividend yield, 4. When I'm down, I say the same thing. If I'm up, I say the same thing. I do not focus on how much I'm up or down or how much percentage I'm up or down. Current yield, 4.37%. My yield on cost, 4.498%. That's why it's circled in the red. This is what I focus on. The dividends paid out on an annual basis, the passive income provided by all the positions in the portfolio, all the positions. Sorry, I didn't have that on. All the positions in the portfolio. $10,527.30 in passive income. This continues to go up as I add additional capital to the portfolio, as the positions pay out dividends, as you saw Cisco, Cisco and Cisco paid out this one, and Comcast, all three of those paid out, and as I do options. I put that money right into the portfolio as well. So $10,527.30, and dividend growth right now is about 5.79% per year. Well, that is really it for this one. Let me know what you think. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And I do a stock pick of the day series Monday through Thursday. So if you have a company, make sure your notification bell is rung so that you can be notified whenever those videos come out. But if you have a company you'd like me to cover in that stock pick of the day video, go ahead and drop that in the comment section below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. You can read the rest of this, but nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk and money should never invest and amount of confusing. Always do your own research, invest based on your situation, circumstances, select criteria. See the advice, certified financial advisor.